Hello, everyone. Pat Smeeta here with your Wednesday, March the 26th daily interest rate update. We did get two key pieces of information today. The first one being the durable goods orders. They came in a little light. The first one being the regular durable goods orders. There was last month it was growing at 3.3%. We actually had a growth rate of 0.9%. The most interesting one was durable goods orders without transportation. We actually saw that the durable goods orders in February increased from zero point 0.1 to 0.7%. However, this is not really good news because this is front loading in anticipation of tariffs. And what you're going to see is all this extra inventory that's out there is going to manifest itself down the line in lower durable goods orders. So, all in all, it was a very muted report. The big piece of information came in on that GDP Now number. We've talked to you about this before. This is the Atlanta Fed forward looking GDP number. And it came in really at the lower end of what everybody was expecting. We saw a GDP estimate of around a negative 1.8%. So the economy will actually shrink 1.8% in Q1 with additional shrinkage expected. At the same time, if you go with the gold adjusted GDP growth, what that means is we might get a 0 to a 0.2% growth. Now, what this means is really the gold adjusted is kind of a red herring because what that takes into account is the export and import of gold. It doesn't really create jobs, it doesn't really add to the economy, but it's calculated as part of the GDP number. The big one to look at is the GDP growth rate of negative 1.8% because that's overall where the economy is heading. And that's what we need to take a look at. So, all in all, not good news on our way to a recession. Now, technical analysis wise, we were kind of flat today. We're stuck in this level right now on the mortgage backed securities, really waiting for the PCE or the personal consumption expenditure number coming up on Friday, which is the Fed's favored measure of inflation. As you can tell, we're kind of riding the bottom level here. Market trying to decide which way it's going to go. We see the same on the 10-year bond yields, where we've actually went a little bit higher today, but we're kind of fighting along this battle right now, really waiting for the Friday result. So keep an eye out for that. Tomorrow, we do get the jobless claims numbers. We get the GDP growth rate for Q4, which will be very interesting to compare with the GDP Now number, and we get pending home sales. Finally, if you like what you see, please follow us, like the video, comment, and share with your partners and clients. We look forward to speaking with you.